Hi guys and welcome. In today's video, you're going to learn how to pick the strongest trending market and how to avoid those that are not trending very well. You may have wondered this in the past. Maybe you thought about this before. Why is it that sometimes what we have is a market that moves sideways? Why is it that we have sometimes a market that's very slow to move in a particular direction? And why is it that sometimes the market moves very quickly in one direction? So, of course, we want to pick these. These are the ones that we want to trade, and they're easiest, they just flow, and we don't want to get stuck in these kind of ranging markets. Or, I mean, these are okay, but these are extra okay. These are really the ones that we want to see. So let's begin and let's go through how to know what will trend. So to do that, you will need to have a opposing strength and weakness. So for a strong trending market, you need the base and the quote currencies to be in opposing strength and weakness. So here we've got the dollar CAD chart, and as you can see, we've got a strong trend, and we've got the market being very heavy, making a retracement and then coming down again, making a very brief retracement, and as you can see, very heavily trending downwards. Now, what is base and quote currencies? If you're not familiar, you've got the first one being the base and the second one being the quote. And what you want if you're trading dollar CAD, or dollar CAD, to sell dollar CAD, you need a weak dollar and a strong CAD. That means the market is more likely to trend downwards. And if the opposite is true, if you've got a strong base currency and a weak quote, then you should see the market trending up. So that's how we pick the best trending markets. We want to see opposing strength and weakness. If both are strong, you will likely get a ranging market. If both are weak, you will also likely get a ranging market. So strong and weak and weak. So this is what we don't want. Okay. Now, let's move on to the next step of how to actually do this. So what are the steps to filtering a trending market? Well, number one, what you do is you use the currency futures charts. If you're not familiar with them, what they are is just like the dollar index. They're a basket. They're just a overall market picture for that currency. And here you can see this is the futures market on the CME exchange. You can read a bit about that if you like, but these in TradingView, these are the names for all the currencies. So E is euro, B is British pound, C is the CAD, J is Japanese yen, A is Aussie, and N is New Zealand dollar. So if you have these and you look through the futures charts, you'll be able to get an overall view of what that currency looks like. And then you only select the cleanest price action, so the really strong or the really weak currency from your list, from your futures. And then you select the right market, or I should say the right pair, by pairing up the strong with the weak, as we already said. And what you do is you plan your entry on that chart only. I'll go through some examples, but this is how you can do it. So let's say, for example, you analyzed all your charts and then you saw, for example, that euro was strong, pound was kind of neither, it's neutral, CAD was strong, yen was weak, Aussie was weak, let's say, and New Zealand was weak. So what do? You take the strong one and you pair it with the weak. So in this case, we have euro strong and yen weak. So we will have euro, yen buy. Then we'll have Euro, which is strong, and Aussie, which is weak. So we'll have Euro, Aussie, buy. And then we'll have also the opposite. So for example, if we have, let's just take here, we've got New Zealand weak and CAD is strong. So therefore you'll have New Zealand CAD as a sell idea. Okay, because New Zealand is weak and CAD is strong. So we should see a downtrend on New Zealand CAD, or at least anticipate one. So this is how you do it. And if you want, you can put, this is a bit messy, but you can put yourself, make a little table and really make it clean and clear, and then pair up those currencies. And then you've got the chart that you want to trade on. So let's have a look at a few examples. Let's now go through this example. On the left side here on the weekly chart, we have the yen. This is 6J1. And on the right side, we have the CAD, 6C1. Now I've highlighted a few candles to look at, some clean candles. So let's have a look at them a bit closer. And here we are. We've got, looking at this candle. So if we look at this candle, just before the 21st of March 2022, what we can see is a bearish candle. Last week was bearish. What do we anticipate? We anticipate further bearish price action. So we are weak. You can say that in this time, the yen is weak. And if we look at the same time, which is 21st, let's just copy it over here. 21st of March, right here. What you can see is at this point in time, last week on the CAD, we had bullishness. And what do we expect? That big bullish candle, we expect continuation bullish. So we have, in effect, a bullish CAD. So what do we expect? Well, if we're going to pair CAD and yen, and we have a weak, let's do that again, a weak yen. Just get rid of that. We have a weak yen and a strong CAD. Therefore, we would expect the market to trend upwards. So let's have a look at what happens on this week of beginning 21st of March 2022. So here's the chart on that day on CAD yen. And we can already see that last month closed bullish as expected. So if we go to the lower time frame, what we'd expect to see is further bullish price action. So we don't know exactly how it's going to happen, but it will be some kind of trending market. At least that's what we would expect, right? So if we now replay forward, we can see that the market is trending very, very heavily. And all of these, from the beginning of the week, every retracement that we have would be an opportunity, high probability opportunity. Now, of course, we can always have reversals, but we have signifying factors. We have these clues. And let's have a look at another example. So let's just get rid of these and do it again. So let's have a look at another example here. So here we go, another example. So I've highlighted this one. Monday on 5th of December of that week, we had a bullish candle. So we will have expecting bullishness on the bullish yen, and on the CAD, 5th of December. Let's have a look at that. We also have a bullish candle. So the previous week was also bullish, as you can see, and it was bullish here. Therefore, we've got both of them being bullish, and therefore we would expect that where the market would be ranging, would be a bit messy. So you can see these are clean candles, and the next week we would expect that continuation. So both are bullish, and therefore on this Monday, 3rd of April 23. So let me go to that. Go to 3rd of April. There we are. Okay. So here we are, and the week begins. The market moves up and then moves down, and then it ranges, and then it continues stuck within the range. And as you can see, the price action is not as clean as it could be. So we only started really getting into into the momentum move right at the end of the week. So the whole week was messy. We went upwards, we went down, we went back up into this range. So nothing really there. And it just keeps on repeating and repeating. Let's have a look at, I know I'm being selective here, but if you look at the very, very cleanest of setups, then you will see that, cleanest of candles, I should say, you will see that they do work. So when it comes to this kind of messy price action, let me just show you again on, in this case, right here. So for example, right in here, we have bullish, then we have bearish. This is a ranging environment. When we have a trending environment, this is what you want to see. So this is what we really want to pick. I'm going to pick those really higher quality ones. So we have trend here, trend there. I know it's easier to see in hindsight, but when you are stuck in a range, you want to leave these ideas alone. We really want to see some big, in this case, here we've got big trending behavior, just like you would analyze if you'd analyze a normal chart, and take those candles one by one. So let's see if we've got another example we can use. So let's just get rid of these. So here we are. Another example, Monday, we've got the 14th of August here. So again, we had the yen trending down, this big bullish bearish candle. The next week, you'd expect it to continue downwards. And here we see on the CAD, we had this bearish candle. Next week, you'd expect to continue to see it moving down. That means both a week, we've got weak yen and weak CAD, which means that you'd expect that it would have ranging behavior. So that is, let's just have a look at that. So we've got beginning of the, what date is that? 14th of August. So let's have a look at that. Right, so here we are on 14th of August. Let me just go to the 4 hours so you can see it clearer. And here we are. So the market moves up a bit, comes back down, comes back into the range, hesitates, very, very messy. As you can see, the price action is not trending very cleanly. Of course, we had a bit of a trend at the beginning. So we had a bit of a trend, what it looked to be a trend, but then it failed. And now we have this range. And that is what we don't want to see. And well, it's expected because both are weak and therefore they cancel each other out. If we look at what's happening right now, in this moment of this video, what we can see is that the yen is strong, but you can ignore this week's candle. You take last week's, we're going closing higher and higher. So we'd expect more bullishness on the yen. And we've got the same thing developing here, bullishness on the CAD, which means that if both are strong, then they cancel each other out, and that is not, CAD yen would not be a high probability choice. So yeah, this clear strength, we've got structures being broken here to the left, we've got structures being broken here to the left on the CAD as well. It's not, this is not a scenario we want to see. We want to see the opposite. One trending up and the other trending down, or vice versa. Okay. Now, remember that these are based on weekly candles. If you were going to use it on a lower time frame, it will be a little bit less reliable because the futures don't work the same as Forex markets. But you can use them on 4 hour if you want to use the 4 hour as your guide, and even the 1 hour. However, as I say, the high time frames are more reliable, especially daily and weekly. So that could be your guide. Now, once you use that and once you really pair them, then you will have your high probability scenario. So once again, if we go back to this picture, you have your currency futures, and you just look at each one of them one by one, identify whether they are strong, maybe they're neutral if the market is ranging, or weak if the market is trending downwards. And then you pair them up and select. So pick those charts, be selective, be picky on the charts that you use, because you want to have the right picks. You don't want to be trading across multiple pairs and lots of charts and spreading all your risk. It's best to be focused and just pick the highest quality setups. So hope that helps. Thank you for watching, and just remember that be selective in choosing what market you're trading, not to get caught up in something which is neutral or just unclear. It could also be that one is very strong and one is neutral, so that could work. So for example, if just for argument's sake we have a strong euro and we have CAD being neutral, then you would expect the market to trend upwards because we have the euro CAD EC to trend upwards, but it may not trend very, very strongly if in the situation where the CAD was weak. But this combination can still be valid if you have a very good quality setup. Price action is telling you the same. This will still be valid, but you may just not have the move, just may not happen as quickly, as fluidly as it would do if the CAD in this situation was weak. Okay, hope that helps, guys. My name is Dima, and see you on the next video. Bye for now.